Welcome back to Traders Corner. Unbelievably, today is the 3rd anniversary of the show, and it's certainly been one hell of a ride for markets over that period. As always, joining us is Garth McKenzie, the founder and editor of Traders Corner. Garth, welcome.
Thanks.
3 years on, it's incredible, isn't it?
Yeah, it is incredible. Yeah, time flies when you're having fun.
Well, it hasn't always been fun, but I think for the most part, and we'll probably talk about that towards the end of the show, we've actually generated some great profits for charity, and this year has been one of the best yet, I think.
Yeah, that's right. Yeah, I mean, collectively we've raised 268,000 Rand in profits over the last 3 years. So it's been a very good story, and that's always starting off a capital base of 250,000. And remember, in the beginning of when we first started Traders Corner, we used to run it quarterly and pay the money out quarterly. Now we started from last year doing a full year of trading, which is the same as what we're doing this year. But yeah, collectively 268,000 Rand, it's a profit effectively of 107% on a 250,000 Rand starting base. Although it's not really comparing apples with apples, because if we had to have started originally with 250,000 and then continue growing and growing, the compounding effect would have probably been greater had we just continued to trade. So it's a good story. You know, it's good for the charity, and it's also hopefully good for the viewers, and the sense, or the mission here is promoting proper trading principles, and I really hope that the viewers have benefited over the last 3 years from those proper trading principles that we try and preach on this show. From
our pulpit, yes. Now, having talked about the markets being having this roller coaster the last 3 years, in fact, the exact opposite has been happening over the last couple of days. It seems like all the volatility has just basically drained away from the market, and it seems very quiet at the moment. And I mention that because in the context of your most recent trade, which is Coronation Fund Managers, which is almost a proxy for the moment, how's that treating you?
Yeah, it's going very slowly on Coronation. The markets are overall quite boring, as you say. The volatility levels are very low. The VIX, the volatility index, is very, very low at the moment. Volumes that are traded are quite thin at the moment, and just generally it seems like markets are in a little bit of a wait and see mode. We're waiting to see what's going to come out of Europe. We're waiting to see whether we're going to get any stimulus out of the Fed and Ben Bernanke. And we're just waiting, and really, in the meantime, while we wait, the market's kind of churning. It's not making any massive headway at the moment, and it is quite boring.
Well, just remind us why you actually put that trade on for the portfolio.
All right, so yeah, this is the Coronation trade. The graph of it is up on the screen at the moment. So a couple of things I want to point out here why we did this trade. First of all, we had an uptrend line there that goes back to the beginning of June, and you can see every time the stock has pulled back to that trend line, it's held support. It also had overhead resistance at 30 Rand, and I felt that it was looking ripe for a breakout because we had what's sort of called an ascending triangle there. And typically these ascending triangles will break out to the top side, it is what's happened here. What we also identified was that there was a bit of a bull flag pattern on the chart of Coronation a few weeks back, and the stock had broken out above that. So what I did last week for the portfolio was I bought 5,500 CFDs. I bought them at 29 Rand 60 with a view that the share would probably break out above the 30 Rand level. And it has broken out above 30 Rand, as you can see by the circled area there. I must be honest, I thought that a breakout could potentially be a little bit more violent and exciting, which hasn't been the case. I suppose that's, again, talking to the point that we mentioned a moment ago, that the markets right now are very lethargic and very dull. Anyway, that chart to me still looks pretty bullish. The Coronation story to me is still bullish. So I'm happy to hold this trade. Our stop loss is at 28 Rand 30, which is quite a long way down from where it's trading now. So we're going to sit tight here. I'm looking for a target of 32 Rand. I hope we can still see that, but we'll sit tight with this trade.
If there is a sudden lurch forward in the market, if, for example, stimulus packages are announced by the ECB and the Fed, there has been talk of the market's been quite quiet because, or the central bankers have been quite quiet because they're all beavering away at some sort of coordinated approach. Would Coronation automatically be a share to benefit from any sudden upswing in the market?
Not necessarily, because it's not what we'd call a high beta share. In other words, it's not going to get a massive kicker suddenly because of external events like that. But I think overall, you know, they say what a rising tide lifts all boats. A share like Coronation has been a strong stock, and typically when the market rallies, the strong stocks should do the best. That's the thinking. So I would expect that we'll see further upside here. It is one of these shares that, because of its occasional thin liquidity, it can suddenly move quite rapidly. And unexpectedly. So but overall, this still looks positive to me, and I'm happy to stay long here.
Okay, so that's the trade, and it's still open. Getting onto this week's trade, and I know you want to set the scene, and it's in the gold sector.
It is in the gold sector, and I know the last time I traded a gold stock, we had ended up getting stopped out of it.
Yeah.
So anyway, I'm going to try again.
You're just a sucker for punishment, aren't you?
Yeah, well, I mean, I see an opportunity here. The share we're going to trade this week is AngloGold. But before we get to that, I want to just set the stage or set the scene by looking first of all at the dollar gold price. And the chart of it is up on the screen there at the moment. What you can see is we've got lateral support at $1,550 an ounce. And that seems to have been holding quite well over the last year or so. We've also got the price having recently broken above a short-term downtrend there. If you look at the downtrend that goes back about 6 months, we're actually above that little downtrend now, which is potentially bullish. We do still have an overall downward sloping trend there, which that downtrend would come in at about $1,680 an ounce. So we really do need to get above that level before we can get properly excited. But for the time being, it does appear to me that the gold price is holding support. It has broken above a bit of short-term resistance, and I think that to me, it does still appear that we can go a little bit higher on the gold price from here, based on this chart of the dollar gold price.
Okay, that is the dollar gold price. What about the rand gold price?
Yeah,
because of course that's pretty important for our local producers.
Absolutely, yeah. So this is the rand gold price up on the screen here now, and this chart goes back all the way to 2008. And what you can see here is we've got a nice, well-defined upward trend going back all those years. And also what's happened over the last year or so is we've actually been in consolidation mode. We're making a large triangle pattern there. We are still within that triangle at the moment, but given that it's an uptrend, these triangles typically do break to the upside, normally, about 65% of the time. They're normally considered a continuation pattern within an upward trend. So I'm still fairly bullish on the rand gold price in this case, and I would expect to see that triangle breaking out to the upside at some point. But obviously it hasn't happened yet. But what I'm seeing on AngloGold, if we have a look at that, which is this week's trade, I'm seeing the potential for a bit of a short-term trade here.
Even though that graph sort of suggests that it's in a longer-term downward trend, and it actually hasn't reversed that yet.
Yeah, it is still in a longer-term downward trend, and that is the one thing that does still concern me, and that's why you'll see when we get into the parameters of this trade, I'm actually going to do it with smaller risk than what we would normally assume on a trade, for the reason that it is still in a downward trend. So if we have a look at it, a couple of things spark my interest here. The first is that we've got a large double bottom there at about 250 Rand, where the stock recently traded down to, and it's bounced up off that level quite nicely. We do have this large downward trend, as you say, and you can see it comes through there. That downtrend comes in at around about 295 Rand, which is still about 15 Rand higher than where the share is trading at the moment, but that is one concern for me, and that is the reason why I'm only going to do a smaller amount of risk on this trade than what we would ordinarily do. I want to zoom in on that area where I've put a yellow block. I'm going to now zoom in on that area so that we can actually have a closer look at a few of the other things that I see here. The first is that to me now looks like a bull flag pattern within what I think could be the first leg of a new upward trend for these gold shares.
So an upward trend, but within an overall downtrend.
Yeah,
okay.
That's it. So we've had a rally from 250 Rand. We rallied all the way up to about 285, 290, that sort of area. And now you can see we've been consolidating in this bull flag pattern over the last 2 weeks or so. Now, to me, that's a nice controlled consolidation, and I do think that there's a probability here that we're going to break out to the upside. It actually has tried to break out to that upside already, as you can see there. So to me, that is possibly now the first consolidation that we're seeing within a potential new upward trend. So I want to just also point out that these bull flags, if it's right, if it breaks out to the top side, you normally take that height, which is referred to as the flag pole, and you can project it out by the same amount, and that gives you a target which is at about 310 to 315 Rand, which is that previous high that you can see from June this year.
Yeah,
so
it's not actually that long ago that we hit that high.
No, it wasn't that long ago. And remember, the gold shares are very volatile. They do swing around a lot, which is why I quite like them to trade. I'm not wild about them as investments. I don't think they make great investments, but as a trading instrument, they are quite volatile, and there's a lot of movement to take advantage of. So I do still see the potential here that we can go out the top of this bull flag pattern, go to 295, which is the large downtrend that I showed on the previous slide, and potentially to 310 to 315 Rand.
Guys, you talk about this volatility, but it does seem as if some of the volatility hasn't actually been that apparent in gold shares this year. Certainly, one of the first trades that you did for the portfolio about 3 years ago was AngloGold Ashanti, and it was actually a phenomenally good trade. There were some wobbles in the midst of it, but it actually worked out very well for the portfolio. That hasn't struck me as being the case for most of the gold shares for a while now.
Yeah, they haven't been as volatile as they were back that time, but remember the overall market volatility back then was quite a lot higher as well. So the thing is, there's still, to me, sufficient volatility to justify trading here. I mean, if you think about it, a move from where we are now, 280 odd rand, up to that 315 rand sort of area, I mean, that's quite a nice movement. That's, if my maths is correct, is around about 10%, which is nice. We can take advantage of that as a trader. So I've done a trade for us this week. I actually bought it on Friday of last week. So Traders Corner subscribers to the website will have got a heads up to this and would have received an SMS alert that we were buying it at 276, which was during the formation of that bull flag pattern, and sort of with an anticipation that it was going to break out to the upside.
Can you show us the mechanics of that trade in greater detail?
I can.
There you go.
I want to first just show that this is, if we're buying it at 276, I'm using a stop loss at 269. Look at the risk to reward ratio here. The risk is identified by the red block. So in other words, that's the difference between our entry price and our stop loss level, and the potential upside is identified by that green block. So the risk to reward ratio here is pretty chunky. It's almost 5 to 1 on this trade, which to me is good. So if we have a look through the mechanics, I bought it at 276 rand, as I mentioned. The stop loss is 269 rand. The risk per share, therefore, is 7 rand per share in this case. So I'm going to risk only 1% of our capital in this case. And remember, most of the time we risk 2% of our capital on trades, but this time, because we are in an overall downward trend, I'm taking a smaller risk assumption on this trade.
So even though this is a high probability trade, the overall picture is what makes you a bit more cautious.
Yep, that's it. Yeah. So we're risking 3,600 rand of our money, given that our account is sitting at about 360,000 rand at the moment. As usual, I take the portfolio risk and I divide it by the risk per share to get the number of shares that we can afford to buy. So if I do that, it comes to 514 shares. So I'm going to round it off to 500 CFDs for our portfolio. And then lastly, if we have a look, the target price, as I said, 310 to 350 in that sort of area. So it means the risk to reward ratio is 1 to 4.85. And that's quite a nice, decent risk to reward ratio. So it means that we're risking 3,600 rand. If we were to get this right and get the move up to our target area, we'd probably make about 15,000 rand on the trade, which is pretty decent.
Garth, ordinarily you do wait for a bit of a breakout before you climb in. You haven't this time round. Is there any particular reason behind that?
I haven't, and I guess it does increase the risk of the trade to not wait for that breakout. And you might accuse me of being slightly reckless for that, which is fair. One of the reasons
reckless is ever a term I would accuse you of, Garth, but carry on.
Well, the thing is that by buying it during that consolidation rather than waiting for the breakout, I get a better risk to reward ratio on the trade. So that's really the rationale for doing that rather than waiting. But it does increase the risk on the trade slightly.
Okay. All right. So that's the most recent trade. We've got Coronation on the go. What is the state of the portfolio at the moment?
Yeah, okay, it looks like this. So there's the AngloGold that we've just discussed. We are slightly on the right side of that trade at the moment. Then Coronation, we're making a mark-to-market profit of about 1,600 rand there. And then a couple of previous trades where we've realized some profits and losses. So overall, our portfolio is sitting at 365,000 rand now. So it's up 46% for the year to date, which I'm happy with. Yeah.
Well, as you should be, very good performance.
Yeah.
And Garth, just to end off with then a quick note on your upcoming courses.
Yeah, so I've got one this weekend on the 18th of August. There is one place available for a lucky viewer who gets in first and emails me. There's my email address, garth@traderscorner.co.za. We've got another course coming on after that on the 13th of October, also in Joburg. So those are the ways you can contact me, email or on Twitter or on Facebook. One of those three methods you can get hold of me, and I'll send you the details if you're interested.
Great. Well, we have to leave it there. Thanks as always for joining us.
Thanks.
That is Garth McKenzie, the founder and editor of Traders Corner.